Welcome to the Aramir Roundtable. Today is the 7th of March, 2019, and we have Scott Batchelar with us, who's also running the TLT Elephant Trade Alert. So welcome, Scott. Nice to have you back.
Thank you.
So before we get too far into it, the normal disclosure that Aramir is not a broker-dealer or investment advisor. Is for educational purposes only. Options and futures involve risks and are not suitable for all investors. Past performance is not indicative of future results. And if you'd like to read the whole thing, pause the recording or go to the bottom of any of our websites. So with that, I will stop sharing and we'll switch over to you, Scott.
Okay. All right. How are we looking?
Good. I see PureVolatility.
Okay, good. Okay. All right. Thank you, everyone, for joining us here. We will discuss the PureVolatility UDXY Enhanced Collar today. Hopefully those on the call are familiar with the term contango. I'll just give you a brief overview of it. This graphic is just essentially saying that in contango we can harvest pretty good premium shorting volatility, and it's a pretty simplistic trade. The issue is once we have a vol spike, we're going to extended periods of backwardation where the front of the futures curve, the VIX curve is higher than outward months, then the whole harvesting contango thing goes bust. So that is why I enhanced the collar, as you'll see, with a little bit of a different trade design. And in full disclosure, I had a partner of mine actually assisted me with this trade as far as enhancing to make it more resilient, which we'll get to here. So basically, what we're looking for as the basic overview of the trade is to have UDXY decline over time, which it will do absent shocks in the middle, right? So if we look over a period of pretty much any time, except for 2018, go back further, pretty much every year, you know, anything that tracks VIX futures, UDXY, SPXY, VXX, etc., they decline over time simply because of the effects of contango. The problem is, that's a very easy trade, and obviously there's always going to be a caveat. So the caveat is you lose everything during vol spikes. So this trade is designed to be able to harvest the contango. Obviously, you're going to give up some because we're hedging it, so we're not going to get what you can get purely by shorting vol. That being said, you know, you can get, you know, hundreds of percent just shorting vol. So it's okay to give up. You know, if we could still target 40, 50% a year, we're giving up potentially 150% a year in profit, right? But ultimately, we're smoothing the equity curve. We're not taking those huge drawdowns. So this trade can and did actually this year, I'm sorry, 2018, when we had the massive vol spike in 2018, when SPXY basically went bust. During that time, this trade was on and made money. So let's get into the trade. I think the best way to do it is to look at how the trade is created, basically. So what I do, instead of having long shares, so a standard collar, right, an options collar is having the shares, let's say 100 shares, and then the protection of one put and a call to protect it, right? That's basically your collar strategy. This one's different in the sense that we eliminate the shares completely. So we go with a deep in the money, further dated put. And the reason for that, as you can see from the risk graph, let me just blow it. All right, so if you look over here, we can see when it's put on originally, this is the first day, and the order is we're buying that long 75 foot, 4 of them. We're hedging it with the January 25th, 60 call, and then we're selling to open, you know, to finance the position. We're selling 2 puts to open. The reason I sold 2 to open in this case is because we had a little bit of a vol spike, and you could see it's coming back down, and I expected it to come down further. So I didn't want to track it completely because I expected a downward move, so I wanted to be delta negative here. And by only selling 2, you can see it's allowed to come up much more sharply. If I had sold all 4, it would, you know, it would bottom out around here, flatten out. By selling 2, I have the ability, if I'm right, my thesis is right, and vol continues to come in and VXY continues to drop, I can sell the additional puts on the way down. And that's how it worked out, as you'll see. But you also see if I'm wrong, and I'm wrong big, and the vol spike looked like it was going to be contained and come back down, but something else added to it and then ripped back up, you can see you begin to profit. And you begin to profit, big, really. I mean, if it were really to rip back up and have one of those huge craters with the market and have vol just go through the roof and have vol, front month hit 30, 35 on the VIX, this would shoot, because this is UVXY is 1.5 times yeah, exactly. 1.5 times. So you would see this would go through the roof. This would be hitting 80, 84, and we could just have a pretty significant profit. As you can see, $5,000 profit in that case. Right? So that's, you can see in both directions, we're going to profit. So the worst part is if just we sit here, right? But even so, we have the ability to sell premium. So that's what we do. Next trade is the adjustment here.
Let me give you a call back in a little bit.
And
all right, thanks.
Let me make sure it's the right slide, guys. All right, that's more like it. So we got down here, and I told to open an additional put here. Let me make sure that's the right slide, guys. I just put this together. I was running.
Hey Scott, did you see the request from Jed to go full screen, or is that going to be a problem with the Zoom?
I can go full screen. I just want to make sure everyone can see the graph visible enough.
Yeah, it looks good. I mean, if you just click that little icon on the bottom to the left of your mouse. Yeah, that one.
Okay.
There we go. Perfect.
Okay. All right. My fault. All right. So I just want to make sure I see where we are now. How am I going up and down from this? There we go. All right. Let's go back to the beginning. Make sure I'm 4, 4, and 2. So we haven't sold the second round of puts yet. I had to roll it. That's right. So as you can see, we're here. When I opened it, I thought we were going to be drawn back down, right? And I was wrong, as you can see. So I put it on when we were at 59 on UVXY. And so that's this is our graph for January 15th, right? So here we are, and it rips up to 66. Obviously, this is bad for our, this is not the direction we want to be going, right? Unless we're going to get this is a huge rip. That's not how the trade's designed. This is actually a hedge, right? So we're hedging it here. We don't want to make money that way because typically you're not going to get a move this violent. It's, once every couple of years you get something this violent. So this puts us in an area where, this is our max pain. It's not, it doesn't kill us though, right? Projected negative 15%, but that's the worst area to be for this trade. But it doesn't mean we have to sit there like sitting ducks. So if I'm wrong, which I clearly was here when I put it on, and you go in the opposite direction, you can see the IV pop helped us here because we're Vega positive. We were even more Vega positive back here. But we're Vega positive, so you're getting an IV pop, obviously, when this thing pops, and it did. The next move here, we're all the way up to 66, so the thing just moved 10%. Yet, we're still alive, right? I mean, this is the projection line, but this is the P&L for the day. We were pretty much break even, not break even, but down 5% on trading vol, not bad. This is where we adjusted. So I bought to close the 56 puts, sold to close the 60 calls, and then I rolled everything up. So I bought to open the 65 calls and moved it out a week, and then I sold to open 2 again of the 58 puts. So you can see, even though I didn't sell everything up here originally, the 2, I was wrong. If I sold all 4, it would have been even better off. But I stuck with selling 2 here because I just really thought it was going to come in. It was just too much of a spike. Pretty much on nothing again in January. So I wanted to keep that ability to keep profit coming here if and when we reverse, which is what I felt we would do. I didn't want to trap myself by selling all 4, especially we had such activity that we're going to go one way or another. I don't know if it's going to stop right here, right? So that's what I did. On the next slide, you can see I begin to sell now my puts, right? So now I have those 2 uncovered puts that I can begin to sell as we move forward. So I sold 1 of them. So now we have 3. And we're long 4 of the others. And you can see we're starting to grind back. And, you know, I keep my profit potential here. The next slide. I sold now a 55 put. So before I sold a 58, we continued to move lower. And I waited for that. And now I'm selling a 55 put for a really large credit here. I'm getting very close to expiration. And then that's us basically at the exit. So we have the, I'm going to put that on the side. So open 155. Yeah, the 58. That's right. So I sold the 58 and then I sold the 55. That shouldn't be up there. This is how I look going into expiration. And then this is the closing period. So here I've got less protection, obviously, but I still have decent protection going into the close or into the into expiration. I'm not holding it, to be honest. I wanted to get a favorable exit here, which I did, and I ended up. This is the last print, but it was a 7% profit. I got out right when it was around here, and that's where I closed the trade. So you can see how it's resilient. We were all over the place. We ended up at 52 on UBXY, and we started, at 59, but we know we went up to 66. It's not a very long time period, and then back down to close out at 52. So we're able to still get 7% while protecting us throughout. But if you're just short and trying to time that, you have no upward protection. It's just a totally different ballgame. So that's the trade. Now, as you can see, this is still, if I were to wake up and, man, I held it way late. This is actually expiration day. We never do that the day before X, but it would be similar to this on the, the Thursday before expiration. We wake up and go through, all of a sudden something crazy happens and it's up, the protection's still there. You can still wake up in the morning and have that right into expiration, that protection with the long call. And again, that's something I can do in the expiration week. I can roll that long call out just a week so I can have it if it's not expiring. So that's the soft and really you have something to act. So a lot of it is discretionary. I get a lot of questions about my trading, both this and the TLT elephant. I wish I could tell you there's a set of strict guidelines. There's just not. These are the trade concepts and the design and the way that they're put together as far as legs and all that. After that, it's very discretionary on what I think is going to happen, right? So I don't follow guidelines that are going to say, well, in this case, I'm going delta negative, I'm going positive, I'm going neutral. I honestly will change those dynamics based on what I think is going to happen either in the VIX market or the treasury market. So I can't, there's nothing I can put down and say, this is what we're going to do X, Y, and Z. You can see systematic and technical nature to the trade, but they're equally discretionary, and that's impossible to put down on paper. So that's why we do the videos, and that's why I make sure to do a new trade image every single time that I do a trade with the reason I did the adjustment. So hopefully when people follow that way, they can learn what I'm doing and, what I'm saying and what I think is going to happen based on and why I feel that way. That's really, I'll always let people know, listen, this is what I was thinking in my videos every week. This is what I was thinking. This is why I adjusted this way. And if I was wrong, here's what I was going to do. If I'm right, so I'll say all those things each and every week. But there's no way for me to just stringently put that down. And that's it, Tom. Why don't you, if you want to kick back in here, that's the trade design. If you have questions or anything I missed, let me know.
Well, how long are these trades? Are these weekly trades, or how long do you put
So
them
it's a
on?
monthly trade. Um, when I put it on, I mean, basically, I'm going to keep it on for a month. You know, this is maybe once a week we adjust on this. So I'm looking to make between 5 and 7% a month for this target, and it's done in a weekly component kind of. It's usually I write the front expiry 2 weeks out. So I'm usually adjusting this trade once a week, and it's a monthly trade that we're looking at.
So this isn't as high frequency as, say, the TLT elephant.
No, I'd say the TLT elephant we adjust on average once a day. Like this week, for example, there were 4 trading days in, and we only have 2 adjustments because things have calmed down a little bit. But that one, I think you can say safely, it's an adjustment a day on average. Like I said, this week we've had 2 adjustments for 4 trading days. Last week we probably had, I don't know, 6 adjustments, 6 or 7 adjustments, 5 trading days. So it averages probably an adjustment a day. This one is more like an adjustment a week.
And let's see, so you wouldn't need an account like Tradier because it's not as commission intensive.
No, not commission intensive at all, actually. I mean, the bottle portfolio is based on $10,000. You know, we're doing, 3 legs basically at 5 contracts each. You know, so 15 contracts. We're not rolling that much. It's really not commission intensive at all.
And then, how long have you been trading this trade?
So, this about 2 years. I have traded it on another site for the last, I think it's about 18 months now. I created it with the help of a member of the other side. I created it, I think it's probably about 2 years. And last year, this portion of the portfolio did well. I mean, it was, we made money shorting vol, even though VXX was positive here. Because we had that huge crater in January, and the service was up 18% in January because we actually got this with that crater. So we made, I'd have to split it out because I started incorporating the TLT into it. It made money last year, I think probably to the tune of about 10%, even though we had a brutal environment for shorting vol.
So it's 10% for the year, or?
Yeah, for the year. Well, I'm the only service that I know that actually made money shorting volatility last year.
Gotcha.
For frame of reference, VXX was up. Okay, the concept of shorting volatility is we need VXX, UVXY, what have you, to be down for the year significantly. These instruments are down. Typically, UVXY is down over 100% a year. That's what it does. So those instruments were up last year, and we still made money shorting vol because we didn't have hedges. But we will target. We target now. We're in a normal vol environment. The VIX around 15, and we have solid contango coming in and out. We're certainly targeting, like I said, 4 to 7%, 5 to 7% on this trade each month.
Do you pass on the trades if the VIX term structure is in backwardation?
So yes, I will. If I think it's going to last, I mean, a lot of times backwardation, people see backwardation, just the front month is in backwardation, and they don't recognize how close it is to expiration. So now the front month is, a couple days from expiration, it's going to actually mimic the spot. I don't consider that backwardation because if the next future contract coming up that's going to be, that's maybe 33 days out, is actually in contango with the spot, and I don't consider that backwardation. A lot of people do. So I would certainly not change anything under those dynamics. However, if the first couple are out, excluding the one that's closest to X, it's less than, let's say, 20 days, and the ones that are basically, 40 days and 70 days out or in backwardation, then I would absolutely shift it. I would either exit it, or I would look to if it looked like backwardation is going to be extended, like in 2008, you could just reverse this trade to harvest backwardation.
Oh, very good. I did set up a trial that I don't know when you wanted to start it.
Yeah, so what I was thinking is, so we're just going to, both are going to be together, right? I don't see any, I like to give people access. There are people that like the TLT trade. There are people that like the VXY trade. There are people that do both. So I want to give people access to both at the same time, right? So for me, this is the Pure Volatility charter. We already did the TLT Elephant charter. Ultimately, these two services will just be together. You know, we're going to have two services offered at the same price. So when you join on a go-forward basis at $129 a month, members will get both the TLT Elephants and the UVXY collar. So we're going to do another charter subscription here, like we did with the Elephant. So those that register in the next, it's going to be 2 weeks this time. We gave 30 days on the Elephant just to get things going. This one we're going to do 2 weeks for the charter for those that join. In the next 2 weeks, they'll get the charter subscription membership of $99 a month, and that's going to give you the 2-week trial. So if you join now, you get a 2-week trial. If you don't like it, you can cancel and you're good. Hopefully those will join and like it and stick on with the $99 a month. And that'll be access to both the TLT Elephant and the XY collar. And then after that, in 2 weeks' time, we're just going to go to $129 for either one. And you come in, whatever. It's basically one service for both trades. That'll be for $129 a month. Basically, in 2 weeks, it's going to be coinciding with the closure of my current UVXY collar and current TLT Elephant. So it's a good time for the service to basically launch full on in 2 weeks. But in the meantime, we'll offer the charter for anybody that wants to come in for either one of the trades.
So just to understand the 2-week charter for the Pure Volatility, if people are already signed up for the TLT Elephant charter, is that just going to be extended, or how's that going to work?
It'll just be extended. Yeah. We'll just extend it, and anybody in the charter for TLT, I mentioned this to you, Tom. It makes more sense. Anybody in the charter for TLT Elephant, we're just going to extend it out 2 weeks from today. So everything's right. 2 weeks from today for the charters.
Sounds good. And then the charter subscribers, after that 2-week period, we'll have a period where you can sign up for the $99 a month, and then when that expires, then it'll revert to the $129, right?
Yes, correct.
Okay, perfect. All right, well, sounds like a pretty good deal to get both trades for that. I don't see any questions. Is there anything else you want to add before we wrap it up? It'll be a short roundtable today.
Yeah, I mean, this trade is not overly complex, right? Because this one I consider myself to be more at the mercy of the market than the TLT Elephant, right? I honestly, I don't think that anybody can go out and tell you what's going to happen involved. You can, all things remaining equal, right? I mean, at the end of the day, bottom line is it's going to be about contango, all things remaining equal, right? So just looking here, does everyone see this? Tom, can you see this? Fine?
Yeah, we can see it.
All right, so as you can see right here, we've got, and this is a really good resource for everybody if you're not aware of BitCentral.com. Give you the background. I'm sorry, we give you 15-minute delay on all the features.
Yeah, it's a great site.
I'm sorry, go ahead.
It's a great site.
Yeah, it really is a great site. Free site, great site. So you can see here, we've gone into zero contango, right? But this is what a lot of people don't look at. This expires in 12 days. So you know what? We can't really look at it that way. You can see now the next one's starting near the spot. So what people are saying basically is the spot's going to come back in, right? People are not pushing this one up even though it's in 12 days. The spot's going to come back in. That's what future traders are saying, and that's probably right. We come back in under 15, and we get our contango again. But here's where I really like to look. You know, let's look out and see. Now, is it huge? No, but it's not. It's not insignificant. So you'll see. We just want to look at the curve itself. It's a nice sloping left to right. You know, the steeper the slope, the better for harvesting contango. But when it goes, it looks like a hockey stick, and this is way up here. This is where we get cause for concern. Now, there's one up here, and this comes way back down. It's less cause for concern. But you start to see this is way up here, and this one's way up here, and the hockey stick is just really, or even candy, it turns to a candy cane type thing. That's when there's cause for concern. But we have the sloping left to right, moving higher left to right. That's what we like. This is going to bounce around. In 2017, it was double digits. The full year. It was, this would be an ATM machine. In 2018, unfortunately, we were all over the place, man. We had 5% contango and then 15% backwardation. And it's just so hard to manage. But this is now I just, again, it associates with the TLT elephant. You know, the Fed is out of our way, and a lot of the stuff is just normalizing now. We're going to see this stuff. The algos have changed the dynamics for short-term trading. We have to accept that, but you know, the background dynamics have improved in the Treasury market as far as the Treasury curve is concerned, and have improved in the VIX futures market as far as the contango curve is concerned. So that to me means this environment is more favorable for both these trades. I mean, 2018 was just a miserable environment for the trades. We still do all right. The service still made money. So that's basically what I'm looking at as far as making adjustments and thinking where we're going. I'm going to look at where the spot is. If I think the spot's going to fall, I want to stay delta negative because the front months are going to fall with it, and then ultimately contango is going to come into play. So, and the one great resource for all things VIX is, oh man, what is John Harwood's site? You know, six-figure investing, right? So, that's not John. Okay. All right, this site is really, really good for anybody that wants to learn about VIX. This guy's absolutely brilliant. He knows more about volatility than anybody on the planet, in my opinion. So this is a great site, sixfigureinvesting.com, to just go in and learn everything about it. He's got a article on contango, and he explains contango so much better than most. Most people believe there's, you know, it's a roll, quote unquote roll yield, and it's really not. It is basically, you know, they're just going down together. They just go down together. This whole thing, but the whole thing moves down together, and that's really what contango is. It's not, you know, this mysterious roll yield. I found that article. You wanted it longer, Tom. Here you go. All right. This is the ring. So this article /tag /contango / is awesome. This basically will tell you everything you want to know about contango and what drives these trades, how we're trying to profit, why it does what it does. And interestingly, this is years ago, this thing, and interestingly, it looks pretty close to today's curve, doesn't it? Not bad, pretty close. So, because this is where it should be, right? People always say, well, VIX averages, you know, 22%. That's not where it lives, right? So the average is obviously skewed because of the outlier. When VIX blasts to 80, well, there's nothing to offset that. Whenever it's negative 80, so it can't go below zero. So the average is completely skewed where the VIX lives. So you got to look at the mode, right? The mean, the median, they don't give you what you need. You look at the mode, which is where it prints the most. The mode for the VIX is 13. So the spot actually historically is down here. That's where it prints the most. And the next print is like 13 and a half, and then 12 and a half, and 14. So it really lives around here, and the outliers, you know, bring up the averages. So, you know, we like to see it where it is right now, drop down, and these things will live in this area, and that's good for tango. So that's basically what we're shooting for.
Nice resource. Thanks for sharing.
Sure.
All right. Well, again, maybe just pop that slide up with the URL. I can put it in the chat too, I guess. Let's see.
Yeah, my computer. Oh,
there we go. So if people want to follow along for the next couple of weeks, it's free. Just, you know, go ahead and sign up. You'll be added to the list. And when we're ready to start the paid subscription, we'll let everyone know. There's no cost to join the trial. You can cancel anytime. There's no fees. There's no billing set up, so you don't have to worry about that. Some people sign up for charters and wonder how to cancel to make sure they don't get billed, but you know, we don't ask for your payment information, so it's there is no billing set up until we tell you it's going to start with the paid subscription. So it's pretty easy. to quit if you don't like it. So really nothing to lose. Just take a look. All right, Scott, anything else before we wrap it up?
I think that's it. Like I said, we'll be closing out the 2 trades that are on now. So those that join us here in the next 2 weeks, or whatever the dates end up being there, but we'll be able to see these other trades kind of unfold and close out and see how we do. Treasury market's all over the place again, so but that one still looks fine. So we'll know where we stand on these trades that are open right now. Get them closed in the next 2 weeks, and then everybody will be ready to start on with the new trades, whether one or the other or both.
Sounds good. Well, thanks everyone, and we'll see you next time. And again, don't be afraid of the charter. It's free and it's easy to cancel, and there's no billing. So with that, thanks, Scott. Interesting trade. I hope people follow along. And yeah.
One last thing too, actually, I don't know if I mentioned this. This trade, this is just the most recent trade. So I didn't go and cherry pick a trade. This is our most recent trade. It's the one that was just closed, as we can see by the dates. And this is a lousy time to be short vol. But this is the one we just did. And the other one that we're open right now, I haven't had a chance to look today yet, but it should be fine. Even though vol's spiking, we're probably still fine. So, but this is just our most recent trade, and we had tumultuous time. Like I said, we were started at 60, went close to 70, back down to 50, and we were able to ride through it and lock in a 7% profit. So it's definitely resilient, flexible, but not a ton of management, as you can see. A trade or two.
Very cool. All right. Well, I'll get this posted, and again, the charter's ready to sign up. So go ahead and fill out the form and take a look. So thanks, Scott. I appreciate it. And everyone, have a great day trading, and we'll see you all next time.
Thanks, everyone. Take care.
All right, bye.